Welcome to Seeking Alpha's Wall Street Lunch, our afternoon update on today's market action, news, and analysis. Good afternoon. Today is Thursday, November 7th, and I'm your host, Kim Kahn. This is a special Fed decision edition of Wall Street Lunch.
I'm staying. I'm finishing my coffee.
The Federal Reserve cut interest rates by 25 basis points to the range of 4.5% to 4.75%, its second rate cut in a row. That came as no surprise to Wall Street, and initial reaction to the move and statement was muted. This is the first time the Fed delivered back-to-back rate cuts since the two emergency cuts issued in March 2020 in response to COVID. With a little new in the statement, that left Chairman Jay Powell's press conference, where he refused to be lured into commenting on the election or expected 2025 economic policies. But when asked if he would resign if Trump asked him to leave, he simply replied, no. That drew some follow-up, and when pressed on whether the president has the legal authority to fire the Fed chairman or demote other governors, he said, not permitted under the law. The market seemed to like the idea of Captain Powell still at the wheel. Stocks had been choppy but little changed after the decision, but then took another leg higher. Treasury yields added to their declines. At the close, though, some typical Fed day late selling left the S&P up 0.75%, the Nasdaq up 1.5%, and the Dow flat. The 10-year yield ended at 4.34%, down about 10 basis points. On policy, Powell seesawed. He said that even with today's cut, policy is still restrictive, and the path to a more neutral stance hasn't changed since September, indicating a steady path on cuts. But he also said he's feeling good about economic activity. Economist Joseph Brusuelas says Powell's noting of just how strong the economy is and the possibility it could get stronger next year really does point out the risk of a shallower policy path in 2025. We will need further clarity on the sustainable long-run growth rate, the terminal rate, and the implied R-star rate when we get the next summary of economic projections at the December 18, 2024 meeting, he said. Once the Q&A was over, traders were pricing in a little more of a chance of a quarter-point cut at the next meeting in December, back above 70%, but only 50 basis points more of cuts are priced in next year. Among active stocks today, Qualcomm offered up better than expected quarterly results and guidance and a new $15 billion buyback program. UBS analyst Timothy Arcuri kept his neutral rating on the stock but upped his price target to $190 from $185, saying he was pleased to hear the company be constructive on the flagship portion of the smartphone market in China. Jefferies downgraded Palantir to underperform from hold, citing unsustainable valuation, noting that it awaits a better entry point. Analyst Brent Thill, who has a $28 price target on the stock, says he underestimated the momentum that Palantir was able to generate after the launch of artificial intelligence platform boot camps, but he also noted the company will no longer have easy comps heading into the fourth quarter in 2025, and it will be more difficult to accelerate growth from here. And Warner Brothers Discovery posted mixed results for the third quarter, but rallied on openness to MA and spin-offs. On the earnings call with analysts, the company executives suggested that they were looking at options for their portfolio of businesses to enhance shareholder value. Shareholders have been bullish on a divestment of the cable business. In other news of note, Australia intends to bring in legislation to ban social media for children under the age of 16, according to Prime Minister Anthony Albanese. The government calls it a world-leading package of measures that could become a law late next year. Reuters says the country is experimenting with an age verification system to help in blocking children from accessing social media platforms as part of several measures that include some of the toughest curbs imposed by any country to date. Social media is doing harm to our kids, and I'm calling time on it, Albanese said, citing risks to the physical and mental health of children from excess use, mainly the risks to girls from harmful depictions of body image and misogynist content targeting boys. And in the Wall Street Research Corner, Goldman Sachs is sticking with its forecast that the S&P 500 will see a 9% gain over the next 12 months to 6,300. Strategists said robust earnings growth should drive continued equity market appreciation into next year. We forecast EPS growth of 11% in 2025. Goldman is also expectant of a post-election rally on a decline in political uncertainty, which will now influence markets. The S&P 500 index has historically generated a median return of 4% between Election Day in November and calendar year end. If repeated this year, that return would equate to an S&P 500 level of roughly 6,015 at the end of 2024 and reflect a forward PE multiple of 22 times, they said. That's all for today's Wall Street Lunch. Look for links for stories in the show notes section. Don't forget, these episodes will be up with transcriptions at seekingalpha.com/WSB. And make sure you're getting the most out of your portfolio with quant, news, and analysis by heading to seekingalpha.com/subscriptions.